Imagine if your bank account lived on a public global ledger, visible to anyone, anywhere. Every transaction, every balance, all recorded in real time, accessible with just a few clicks. It sounds radical, but this vision is quickly moving from theory to reality. This isn't sci-fi. It's a future now being mapped out by regulators and financial giants. Around the world, policymakers and industry leaders are debating how to bring traditional banking into the digital age, using blockchain as the foundation. The old world of private ledgers and hidden transactions is facing a seismic shift. Paper trails and closed systems are giving way to open digital records that anyone can verify, challenging the very core of how banks have operated for centuries. Crypto is no longer a fringe topic, it's at the center of discussions in major banks and government agencies. What was once dismissed as a fad is now a driving force behind innovation in finance, with experts exploring how blockchain can reshape the industry. The promise? Instant, secure, and transparent transactions, where audits happen in real time and ownership is cryptographically verified. Imagine sending money across the globe in seconds, with every step traceable and protected by advanced encryption. Key players like the SEC and Bank of America are laying the groundwork for public blockchains to become the backbone of the global economy. Their investments and pilot programs signal a major shift in how financial infrastructure could soon operate. This could eliminate costly intermediaries, making finance faster, cheaper, and more direct. No more waiting days for transfers or paying high fees. Blockchain could streamline everything from payroll to personal payments. But with this power comes new questions about privacy, security, and the role of government. How will your data be protected? Who controls access? These are challenges that must be addressed as we move toward a more transparent financial world. Let's break down how this on-chain revolution is unfolding, and what it means for your money. The future of banking is being rewritten, and it's happening faster than you might think. For years, regulators viewed public blockchains with deep suspicion, often associating them with risk, volatility, and the potential for illicit activity. But in a surprising shift, the SEC is now highlighting the radical transparency that public blockchains offer, seeing them as a tool for greater accountability. Unlike private ledgers locked away in banks, a public blockchain acts like a single, indestructible glass notebook. Every transaction is recorded and visible to anyone, anywhere, in real time. This means regulators and investigators can spot suspicious or illicit activity instantly, rather than waiting months or even years for evidence to surface. For example, if funds are transferred from a sanctioned wallet, the movement is immediately flagged and visible to all, making it much harder to hide wrongdoing. This level of transparency could revolutionize compliance, streamline auditing processes, and even help restore public trust in financial institutions that have long operated behind closed doors. Investors for the first time could verify a company's financial health by viewing real-time cash flows and transactions, not just waiting for quarterly or annual reports. Ordinary citizens could track government spending as it happens, potentially reducing fraud, waste, and corruption in the public sector. But there's a catch. While every transaction is public, the identities behind wallet addresses remain pseudonymous, creating a new layer of complexity. Striking the right balance between radical transparency and individual privacy is now the central regulatory challenge, as both are crucial for a fair financial system. The big question remains, how do we harness the benefits of openness and accountability without turning the world of finance into a tool for mass surveillance and eroding personal privacy? A public ledger brings a privacy paradox, transparency versus personal security. On blockchains, transactions are public but tied to pseudonymous addresses, not names. This offers some privacy, but sophisticated analysis can still reveal identities. The challenge: how to ensure accountability without exposing every detail of your financial life. We need a system that proves transactions are legitimate without revealing everything. Imagine verifying you have enough funds for a purchase without showing your entire balance, or proving your money is clean without exposing your full history. The goal is a new model, one that's open for regulators, but private for individuals. Achieving this balance is crucial for the future of on-chain finance. The answer lies in advanced cryptography. Let's see how zero-knowledge proofs can help. Zero-knowledge proofs, or ZKPs, let you prove something is true without revealing the details. It's like proving you're over 21 without showing your ID. In finance, ZKPs allow banks to prove compliance without exposing customer data. Individuals can show their funds are legitimate, without revealing their entire transaction history. Regulators get the assurance they need, while privacy is preserved. Agencies like the SEC are now exploring these tools to balance transparency and privacy. ZKPs are moving from theory to real-world use, forming the backbone of a new, secure financial system. This is the breakthrough that makes on-chain finance truly viable. Bank of America is now openly exploring public blockchains, stepping into a new era of digital finance that was once considered experimental. The bank is also investigating tokenized assets, a clear sign that traditional finance is preparing for a digital leap, where assets can be represented and traded seamlessly on blockchain networks. The shift is like moving from snail mail to email, instant, global, and programmable. This transformation is not just about speed, but about unlocking entirely new possibilities for how money and assets move. Stablecoins and tokenized deposits are at the heart of this change, providing a bridge between traditional currencies and the digital world. These innovations are making transactions faster and cheaper, reducing friction for both businesses and consumers. Multi-billion-dollar settlements that once took days could now clear in seconds, thanks to blockchain's efficiency and transparency. Programmable money means payroll, aid, or loans can have built-in rules, unlocking new financial products and automating complex processes that used to require manual oversight. This isn't just a US trend. The momentum is global, with major financial hubs watching closely. Banks and regulators worldwide are racing to upgrade their systems, eager to capture the benefits of blockchain and avoid being left behind. The first movers will gain a huge advantage in the new economy, setting the standards and reaping the rewards of early adoption. Bank of America's public embrace signals a global migration to blockchain-based finance, encouraging other institutions to follow suit. The financial world is being rebuilt, faster, smarter, and more interconnected, with technology at its core. The future promises a financial system that is more open than ever, breaking down barriers and creating new opportunities. The question is, who will lead the charge, and how quickly will the rest of the world catch up? Ripple and XRP are evolving to meet the demands of this new financial era. Instead of focusing on a single blockchain, Ripple is making XRP and its stablecoin RLUSD available across multiple networks, like Ethereum. This is like making a currency usable in many countries, not just one. Now, XRP and RLUSD can be used in DeFi apps, lending, and payments across the Web3 ecosystem. For users, this means more flexibility. For institutions, it means seamless settlement and compliance. This multi-chain approach transforms XRP from a niche payment tool to a versatile digital asset. Ripple's strategy addresses past criticisms and positions XRP at the center of the interconnected on-chain world. As finance moves on-chain, assets that can bridge networks will be essential. Ripple is making sure XRP is ready for that future. The on-chain migration is a global movement, not just a US trend. From the digital euro to China's CBDC trials, nations are racing to build tokenized economies. Regulatory clarity and institutional adoption are accelerating this shift. Blockchain's promise is finally becoming reality for mainstream finance. Assets like XRP, designed for fast cross-chain value transfer, are poised to play a pivotal role. The journey will be complex, but the direction is clear: a more efficient, transparent, and accessible financial system. The great on-chain migration has begun, and utility-driven assets will be its foundation. Staying informed is now essential for anyone who wants to understand the future of money.